Everybody knows about the opening range breakout, but the problem is not many people know how to trade this in a fully mechanical, rules-based trading system that takes all of the guesswork out of your trading. In this video, I'm going to share with you my fully mechanical open range breakout system that has been proven to make over $70,000 in just 7 months of trading. I'm going to show you exactly where to enter, where to exit, and where to place your stop loss. And what I've done is I've broken the system down into 4 simple steps, but it's very important that you follow every step closely. And so with that being said, let's dive into this video. Okay, so step number 1 is the most important, yet I still see traders getting this wrong. And step number 1 is identifying the opening range. And we need to ensure that we're doing this in a fully mechanical, rules-based way. So we're looking at NQ on the 15-minute time frame. This is the futures market, but to be honest, whether you're trading FX, whether you're trading futures, it doesn't really matter. The principles remain the same. The rules are the exact same. Okay, so I want you to observe price action between 9:30 a.m. Eastern and 9:45 a.m. Eastern. And this is a huge problem that traders are facing because they turn up to the market, it's in the morning, often they're quite excited, they're looking for a position, they may be feeling quite emotional, and they can't even have the discipline to wait 15 minutes to see the price action develop. What I want you to do is mark on the range high, okay, so the high of this candle, and the low of this candle. So this is your opening range right here, the first 15 minutes of price action. And so what you're doing is you're allowing the dust to settle in the market because, often at market open, there's a lot of orders from the previous day. There's a lot of people that are looking at getting involved in the market, and so it's often very, very volatile on the market open. And so there's often whipsaws, there's often false moves, there's often moves that really don't make logical sense. So it's important that we're not part of the whipsaw and that we allow the dust to settle. So that is step number 1, identifying the opening range. However, step number 2 will prevent you from getting involved in fake breakouts. So next, I want you to drop down to the 5-minute time frame, and step number 2 is our entry confirmation. So you can see when we drop to the 5-minute time frame, we've observed the first 15 minutes of price action right here. And what we're simply waiting for is a 5-minute candle closure outside of this range, okay? This is your breakout. We're not waiting for, a wick below. We're not waiting for price to come below here. We're waiting for price to close below to indicate that momentum is actually stepping into this market. This is where so many traders are going wrong, right? They're going to take this as price goes a certain distance below. They're going to take this, not even waiting patiently for the closure. And that's why often you're going to get involved in fake breakouts, right? You're going to see this kind of wick to the downside. Price then closes back in the range. And, you've just been faked out. Right? So waiting for a 5-minute closure will prevent you from getting faked out in the market. Okay, great. So this is our entry confirmation right here. We can enter on the closure of this candle right here. However, this is where so many traders are going wrong with the opening range breakout, right? Because, it's one thing knowing when to enter, but it's another thing having a objective stop loss placement. Because do we place our stop loss here? Maybe it's a little bit small, right? Do we place it above the opening range high? This is probably a bit too far, right? And so we need like a mechanical way. We need a way that every single time when we're placing this trade, we're going to have a consistent stop loss, right? I'm not saying consistent in terms of the size of the stop loss. I'm saying consistent in terms of where we're going to be placing the stop loss, right? And so step number 3 is stop loss and take profit placement. And the easiest way that I found to make this fully mechanical is if you mark on 50% of your opening range, right? So we mark on the range low to the range high. You can do this by using a Fibonacci tool, right? So if you head over to the top left of your screen, there's this drop down right here, and you can select the Fib retracement, mark this on, whether you go from range high to range low, it doesn't really matter, okay? But mark this on, and then what I want you to do is apply these right here. So you have 1, 0, and 0.5. Okay, so 0.5, all this simply means is 50% of your opening range. Okay, so there's many ways to do this in terms of your stop loss placement, right? But I like to apply a 5-point buffer above the 50% retracement, right? So to the retracement, let's say right here, you can see that's 80, let's call it 86 points, okay? So I'm going to make this 91 points, okay? And this is where my stop loss is going to be, okay? So this is a firm stop loss. You know, if price comes up here and tags this level, we're going to be took out of this trade for a -1%. You know, whatever you're risking, you're going to be stopped out right here. And then what you're going to be looking at doing is targeting 2 times your risk to reward, okay? So if this is your stop loss here, 91 points, you're going to be looking at targeting 1 to 2. So you're going to be targeting 182 points. And what this stop loss placement allows you to do is ensure that your stop loss, you know, it gives it the trade a bit of room to breathe, but it's not too large where it's above the opening range high, okay? So what I found is this is way too far, okay? And a stop loss placement just above the 50% gives it enough room to breathe. It's not too tight where you're getting stopped out all of the time. You know, let's say your stop was like here. Well, price could easily just retrace, stop you out, and then continue lower, right? So it gives you that kind of cushion to allow the trade to breathe. And this ensures that your stop loss placement is the same every single trade, right? Because guess what? You know, every single day, you're going to have an opening range. You're going to have the first 15 minutes of price action. So you can mark on the retracement, right? The from the high to the low, and you're going to have that 50% retracement every single day. So this means that the system is now fully mechanical, right? Because a huge problem that, you know, so many traders have told me is, oh, you know, I know where to enter, right? But where the hell do I place my stop loss, right? And so this should fix that for you. Okay, so step number 3 was amazing, but step number 4 will literally be the difference to whether you're profitable or not profitable trading this system right here. And so step number 4 is no micromanaging. Okay, so we're tagged in short in this trade right here. So, you know, we're not going to be looking at micromanaging. We're not looking at getting emotional. We're not looking at closing this trade early. What it's going to be is either you're stopped out right here, your take profit is hit for a 1 to 2, or you close the trade at the end of the day, no matter where the trade is. So whether it's a losing position, a winning position, a break-even position, wherever price is at the end of the day, you're going to be closing this, okay? So if we just fast forward this on right here, if we play this price action out, you can see the end of the day was right here, okay? So this is 4 p.m. You're going to be closing this trade out right here. Okay, so you can see this trade wasn't actually the most profitable, and you would have gained 0.81 on this trade right here. Okay, because you're closing this out at the end of the day, no matter where price action is, right? Whether it was at a 1 to 1.5, whether it was towards your stop loss, it doesn't matter. The trade's getting closed at 4 p.m. every single day, and that is how we stay mechanical. You know, and that's the great thing, right? This is taking all of the guesswork out of it. Yes, this is not the most amazing trade to show you, right? But it's important to show you kind of the mechanical nature of this system, right? No matter where you are at the end of the day, you're closing that trade out, you're coming back the next day, and you're repeating this system over and over again. So now I want to show you some more trade examples, just so I can really hammer this home. We are looking at NQ on the 15-minute time frame. We're heading into the NYSE Open, okay? So we're heading into 9:30 a.m. Eastern, and we're looking for the first 15 minutes of price action. So this is your 9:30 a.m. 15-minute candle. This candle closed at 9:45. So what we can do, right? We can go ahead, mark on the range high, mark on the range low. This is your opening range. You can see there was quite a lot of kind of indecision. We had a wick to the upside, we had a wick to the downside. And this is often what you find happens on the opening range, right? Okay, so next I want to drop down to the 5-minute time frame, and we can observe this is the first 15 minutes of price action. Then what we're waiting for is a 5-minute closure outside of this range. We got to be very patient, right? The market's ranging. Wait for the market to show its hand. We don't know at this stage whether we're looking to go higher, whether we're looking to go lower. So it's important to wait for the market to show us that. You can see right here, if I just zoom in, what do we get? Well, we get a 5-minute closure outside of this range high right here, the opening range high. So now we can classify this as an opening range breakout. We have the confirmation, and so we can enter on the closure of this candle right here. Our stop loss will go below the 50% retracement of the opening range. So if we mark this on Fibonacci in the top left right here, range high to the range low, we get our 50% retracement. So this is a safe place to place our stop loss, okay? And as I said before, I like to place sort of 5 points below this low. So if this is to the low here, 38.5, so what I'm going to do is add 5 points. So if it's 38.5 right here, that is going to be 43.5. This gives the trade a little bit of room to breathe, right? Because we don't know if price is going to chop around. We don't know what price is going to do regardless, right? And so it's important that we have a clear invalidation on this setup. And what we're looking at targeting, well, we're targeting a repeatable 1 to 2 risk to reward. We're not looking for a home run. We're just looking at taking a small, repeatable piece out of this market that we can do on a consistent basis. So you would be tagged into this trade right here. And then it's just a case of allowing this trade to play out. So no micromanaging, no getting emotional, just literally kind of set and forget this trade. Either your take profit is hit, your stop loss is hit, or you're going to be closing this trade at the end of the day. Okay. In this example, you can see this trade did hit take profit for a 1 to 2. So this was hit right here. And let's see, right? Maybe we got some continuation higher. It doesn't look like it in this scenario, right? So pretty much your take profit was hit right here. You're around pretty much the high of the day. And then we got that kind of corrective move to the downside, right? So it's really important. I guess this trade stresses the point of why, how important it is to take your profits, bank your profits, and then come back the following day. Okay, so again, we're looking at NQ. We're looking at NASDAQ on the 15-minute time frame. We're heading into the NYSE Open. So this is 9:30 a.m. Eastern. We've observed the first 15 minutes of price action, right? So this is the 9:30 candle, the 15-minute candle. So we can go ahead, mark on the range high and the range low. Then we can drop down to the 5-minute time frame. So you can put your Fibonacci in to begin with, right, if you want, just to mark on, the 50% retracement of the range. But remember, we still need to wait for the breakout. And that is exactly what we get right here. So we get the candle closure. This is not a wick to the downside. This is a full body closure outside of the range. So this is indicating to us, momentum's to the downside. Essentially expect lower prices, right? So we can enter on the closure of this candle. Stop loss 5 points above the 50% retracement. So this is 64 points to the 50% retracement. Add 5 points to that. Funny enough, that is 69 points as a stop loss placement on this trade right here. And what we're looking at targeting, well, same as every single trade, right? We're looking at targeting a 1 to 2, right? If your stop loss is 69 points, we're going to be looking at targeting 138 points. Okay, so this is a 1 to 2 risk to reward right here. So yeah, we're tagged short in this trade right here. And you can see this trade was actually a losing position. And yeah, I think it's really important to stress that you're gonna have losing trades with this system. The win rate is around 50%. With a 1 to 2 risk to reward, that is amazing, right? Because anything more than a 33% win rate, you're going to make money over the long term. Then it comes down to your discipline, your risk management, and everything else that comes with profitable trading. Okay, so we're looking, again, this is NQ, NASDAQ, and all of these trades have been literally in August, right? So this is the 13th of August here, and we have witnessed the first 15-minute candle on the open. You can go ahead and mark on the high and low, right? So you have your range high right here. Go ahead and mark that on, and your range low right here. Then we can drop down to the 5-minute time frame, and we can wait for our closure, right? Notice right here, what do we get? Well, we got a wick below, right? We don't close below. So we're not looking at taking a trade here. We're waiting patiently. We're waiting for a closure. This is exactly what we get right here. We get a strong 15-minute bearish candle closure below the opening range low. Okay. So at this point, we've got a valid opening range break. We can go ahead and mark on our retracement from low to high for our stop loss placement. So we can enter on the closure of this candle right here. Invalidation, 5 points above the 50. Retracement, so that's 31.5. So we're going to make this 36.5. Give it a little bit of room to breathe. And we're looking, of course, to target a repeatable 1 to 2. Okay. So this is the setup right here. And it's a case of not micromanaging now. Allow the trade to play out, be very, very patient. And let's see how this plays out. So you can see this one did hit take profit right here for a 1 to 2 risk to reward. And this is by sort of 10:30 a.m. Eastern. So by 10:30 a.m. Eastern, you're in and out of the market, right? You're not micromanaging, you're not getting emotional, and that is you done for the day. And I want to show you how this is proven to make over $70,000 in literally 7 months of trading. And I want to make it very clear, this is using $2,000 as your unit of risk. So, most people, they're looking at getting funded, or they're at least funded, and you're going to be using a $2K per trade. If you lose a trade, you're going to lose $2K. If you win a trade, you're going to be making $4,000, right? All right, and as we run through the data, right, you can see we had a loss, we had another loss, we had a win here, we had a loss, we had a win, we had a break even, we had another loss, etc., etc. So I've backtested this over 7 months of data to prove to you that this system actually works, right? And I don't want you to just take my word for it, right? I want you to backtest it yourself. I want you to see the results for yourself as well. Because ultimately, that's what's going to help you build the conviction. That's going to help you build your confidence in the markets, right? Until you backtest it and see it for yourself, it's hard to be fully committed. What I'm going to do is sum all of the trades, right? So this is over 7 months of data. I'm going to sum all of these trades right here, and we're going to get a total in the bottom right of your screen. So this is on Excel, right? And the total is 35.5R. Well, what does that mean to you, right? If you're risking $2,000 per trade, well, you can expect to make 35.5 times your unit of risk, okay? So that equates to just over $70,000. For you guys that like to work sort of in terms of percentages, you can expect to make on average 5% per month trading this system right here. And so if you like to look at it kind of on a monthly basis, you can expect to make just over $10,000 per month trading this fully mechanical rules-based trading system. Well, how is that, right? Well, the return is 5% per month on average. Then you're going to times this by your risk, which is $2,000 per trade. Well, that equates to just over $10,000. And my students have been using these proven mechanical trading systems that are backed up by real data and results for years and years in the markets. So if you would like to learn more and you would like to see me trade live every single day in the markets, you would like to see my exact game plans, trade plans, my exact analysis, executions, and you would like to learn fully mechanical rules-based trading systems, then make sure to check out my exclusive community or one-on-one mentorship. The link is in the description down below. If not, then I would love to connect with you via my free Discord community. The link is also in the description down below. And so I look forward to seeing you on the inside. As always, thank you so much for your time and support, and you take care, guys. Bye-bye.